The outlook for gold to start with is extremely positive. There's a lot of momentum that's been built up in the gold market over more than 2 decades. And what we're seeing at the moment with respect to the gold price is just a continuation of that momentum that's very soundly based on a whole heap of very important and fundamental factors. So looking at gold prices where they are now, well above $3,000 US per ounce, closer to $3,400 US per ounce. It's not just an overnight phenomena. There has been a significant focus on gold over the last couple of years and its very strong price performance, particularly during the Trump era of politics and all of the geopolitical and economic uncertainty factors that have driven gold to record highs in the last couple of years. But really, gold's recovery, gold's climb actually started back in the late 1990s when gold was trading below $300 US per ounce, and gold was effectively looked upon as an ancient relic by many in financial markets. And since that time, coinciding with gold's rise from below $300 per ounce to $3,400 US per ounce, we've seen some really important factors. Underlying levels of debt around the world have skyrocketed. Particularly since COVID, there have been some key factors that have led to debt levels increasing. What that has done is that has depressed the value or weakened the value of fiat currencies, global currencies, the major currencies. We've seen inflation emerging, of course, recently, and central banks have been buying gold increasingly in record numbers, and they've been doing that for decades. So where we are now with respect to gold, we're also seeing private citizens, in particular China, coming into the market in a major way. So sophisticated investors, ETFs, ETF investment is at its highest level now for 4 years. There's been a significant turnaround now. Gold price is up about 30% in US dollar terms. It's up even higher, closer to 35% in Aussie dollar terms, which is fantastic for our gold producers. So where we are now, look, we're seeing uncertainty continuing, global trade uncertainty. What are the impacts? What are the lasting impacts of tariffs that are going to be affecting all of the world's major trading countries? What is that impact going to have on global economies and also private companies? Going back to the bad old days of tariffs, of course, we knew that tariffs were highly inflationary. And I think what we're going to see in the next year to two is those inflationary impacts, that inflation genie that's probably been put back in the bottle starting to re-emerge again. So I'm very, very optimistic on gold prices. I think the gold prices can definitely go higher. There's a lot of momentum in the market, and I think gold prices can head towards that 4,000 US dollar per ounce mark based on ongoing geopolitical and financial uncertainties. With respect to copper, copper's a different beast. When we look at copper, it's an industrial metal, industrial commodity. It's very much beholden to what's happening with respect to the global economy. And in recent times, copper's been particularly vulnerable because there are some significant positives in the market emerging. Electric vehicle use. Copper is a major component in the energy transition. By the same token, though, we've seen China's economic growth has been quite opaque over recent times, really since COVID. So we haven't seen the traditional driver of commodity prices coming out of China. And that's led to a little bit of a lack of direction with respect to copper price. Now, the long-term demand fundamentals are still very, very good, but in the near term, we haven't seen that dramatic take up in copper usage. What we need as far as gold and copper is concerned, because they are two major and significantly important commodities for various reasons, one on the precious metal side, one on the industrial side. We need new discoveries. More than that, more than new discoveries, we actually need mines being commissioned because there is a significant shortfall. Consumption is forecast to increase dramatically. We know that from the perspective of the energy transition and copper, we know that more mines are required. The problem at the moment on the supply side and why end users are getting quite nervous is that most of the world's major mines located in South America, particularly in Chile and Peru, the world's biggest mines are suffering from a decline in grade, which is adding to costs. It's reducing profitability. And because of a whole range of factors that around the world at the present time, where we've seen the funding taps turned off, a lack of funding for exploration, typically over the last 10 to 15 years, and also challenges in terms of mining approvals, uncertainty, sovereign risk issues, we haven't seen new mines coming through. So what that is going to do is that is going to push up the price of copper. It is going to see a situation where end users become increasingly desperate to source supply. And so what we need certainty. We need to see a clear picture of new mines coming on stream. So mines in PNG, we know that PNG has an outstanding track record as a mining destination. It's close to markets, particularly in Asia. So that is really, really important in terms of transport time, availability, low transport costs. PNG is an outstanding and emerging resources powerhouse. We already know that it has outstanding and remarkable resource endowment, but particularly with respect to copper and also gold, two commodities that are very much in demand, are going to increase their attractiveness to investors and are going to become increasingly more important in the decades to come. We need to have that supply coming to market. There are a whole range of new age factors and considerations that are driving copper demand. So one of the biggest, of course, one of the traditional uses has been in electrical wiring and your typical motor vehicle, that sort of thing, and that's really, really important. Household electronics, but with AI, with renewable energy, with electric vehicles. Now, we're looking at a situation where we're probably going to need probably 10 to 15 times more mining effectively to address the imbalance between where copper supply is now and where we need it to be. Copper is the most important commodity as far as the energy transition is 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 going, because it's not just about renewable energy itself. It's not just about the batteries. It's not just about the motor vehicles. One of the biggest factors, one of the biggest usages for copper is going to be in the whole re-electrification, the hardware in terms of transmission lines and all of that sort of stuff, the infrastructure as we transition to renewable energy. That energy is not free. It has to be harnessed. So it sounds great, renewables, solar, wind, but you cannot have that without the solar voltaic panels. You cannot have it without the energy infrastructure that's going to take that electricity, shove it down a transmission line, and get it to where the end users are, big cities and industry, for example. So that is the big upside. The current transmission network cannot cope. So that is one of the biggest issues with respect to copper. And of course, the enhanced demands in terms of energy that's going to come from AI, for example, is just mind-blowing. So copper is the commodity that we need. Everybody knows that, but we really need to be taking action now in terms of the ramp up on the supply side of things. Look, I think with respect to both copper and gold, they are two key commodities for different reasons. Gold, investment demand, a hedge against uncertainty. Copper, along with oil, has always been one of those key commodities that is a reflection of economic growth. Now, oil is becoming less important as we transition away from fossil fuels, but that is reinforcing the importance. That transition is reinforcing the importance of copper. And there's also the strategic aspect to it as well. Companies and also countries around the world, in particular the United States, in particularly Europe, also Asia, are very, very concerned about ensuring that their industries have access to the fundamental raw materials, including copper, that will allow them to facilitate energy transition. And that is why commodities like copper are becoming increasingly important from a strategic point of view. So PNG, as an emerging powerhouse in resources, is a really, really important and strategically placed. And we're going to see more and more focus on new sources of supply from places like North America, from Australia, from Asia, from Europe, and wanting to secure supply. So when places like PNG can also do that on significant scale, that is what investors, countries really want. So PNG is very well placed indeed.